Hey guys, it's Christian, your Vancouver Realtor. And first, I want to say thanks to all the new subscribers who jumped on board here recently to our channel. Appreciate that. And if you enjoy the stories, the content, give us a like or subscribe. We love having you. Now, the topic for today's video is an accident waiting to happen? Are Canadians piling on too much mortgage debt? Well, that's what we're going to do today is dig a little deeper, peel back the layers of the onion here, and let's take a look at what the numbers really tell us. What stories do they really tell us? Because if all you're doing is looking at the headlines of the Vancouver Sun or a YouTube video, you can get confused fast. And I want to unconfuse you. I want to share a little bit more about what I've learned and piece this puzzle together a little bit better for our understanding. So the very first thing I want you to know is that in Canada, when you're going to buy a home, you're putting a down payment down. Most of the time, it's 20% or more. Actually, I read an article about 6 weeks ago that showed the average down payment for different provinces. In BC, the average down payment is $160,000 per home. This tells us that there's real money here, right? This isn't the United States where people were working at McDonald's with no money down, were walking into a bank and buying condos. This is a different story. Here in Canada, you need to have a lot of money, and it's tough to meet those income restrictions. Let's put a graph up on the screen. You can see here, this is the average BC home buyer down payment. Just under $160,000, that's the blue line in the far left. And compare that to Quebec, for example. That's the red line, where the average down payment is just over $58,000. And that's because home prices in Quebec are a lot less. They're probably between $400,000 and $500,000. Alberta, Nova Scotia, similar home prices. So you can see that here in BC anyways, that's a big bar to jump to make that $160,000 down payment. Now, crucial point is that represents about 22% of the purchase price. Okay, so in this case, that would be about $700,000 and a little over $700,000. So that's a comfortable cushion when you're buying a home. But I also think it talks to the underlying strength of the market. These aren't high ratio 3, 4, 5% mortgages. Now, there are some of those out there. I have had clients who had a 5% down payment, but those are very rare. I would say for every client that I've worked with who has a 5% down payment, which in markets is considered, if too many of those people are out there, it's considered risky because, there's not enough, it's basically all money coming from the bank. But for every client I've worked with, we've probably had 10 clients who use a conventional 20% down. Right now, I'm working with about 4 clients looking to purchase. All of them would be looking at a conventional mortgage, and in one case, someone may put down about 15%. So, pretty solid numbers there. The other thing about mortgages and mortgage payments, the numbers I came across were that the mortgage payment has increased by about 4%. So even in this year where home prices have gone up some 22% in the last 12 months, the average mortgage payment is only up 4%. In real dollars, that's about $60 to $80, right? And for a husband and wife, or even a single person, you can afford an extra $60 to $80. And I think that the reason for that is, one, obviously the interest rates are lower, but also people are getting gift money from their parents or even uncles and aunts. So some things to keep in mind. So all those bad headlines you see in the newspaper, they're not as bad in reality. Now, there was an interesting article I came across on BNN, Bloomberg News here in Canada, and they were talking about this issue of whether or not the lending is getting too lax. And whether this could cause a housing crash. And they talk about this guy who bought a house in Langley for $1.1 million. He put down $300,000 and got a loan for the other $800,000. Now, I started to do the math on this guy's mortgage. It's not actually in the article. He has about a $3,100 a month mortgage. Now, what he's doing is what a lot of Canadians are doing, and he's renting out 2 bedrooms in the basement of his house. He expects to get about $2,300 a month. So when we do the numbers on this guy, his tenants are going to be paying $2,300 of his $3,100 mortgage. So the tenants are going to be doing the heavy lifting, whether they know it or not, which, by the way, is why as a tenant or a renter, you always want to be thinking about getting your own home, right? Because that rent you're paying is not just rent, as I tell my clients. You're really paying a mortgage. It's just not your own. You're paying your landlord's mortgage. So you want to make sure that you always start thinking about paying your own. Anyway, back to this guy in Langley. His tenant is going to be paying most of his mortgage. The $800 that he and his wife have to pay, it's cheaper for him to buy the house and do it this way than it would be for him to rent a 1 or 2 bedroom condo. So I just found that was quite interesting. They kind of buried that further down in the article. They didn't start with that. Otherwise, you would be asking the same question I was, which is, hey, it's not that bad. Now, he is borrowing here 8 times his salary. His salary is $100,000. And the reason he's able to do it is because he's getting all that rental income from the basement suites. Typically, though, you're only going to get about 4.5 times the loan from the bank based on your salary. So if your salary is $150,000, for example, you're going to get about $700,000 loan from the bank, right? And then you might get some gift money from your parents and so on. The second thing mentioned in this article, and I do see this a lot, is I have a lot of clients that get help from family or even friends. And I see that probably 9 out of 10 clients I'm working with are getting some kind of help from mom and dad. Remember, if they're from Vancouver, it's really easy. Home values have gone up a lot in the last 30 years. So parents will often take out $100,000, $200,000 in equity and help their kids out towards the down payment on their very first home. And that's a good thing to do. Probably don't need it if you're in Saskatchewan, but you do need that help if you're in BC. Because home prices are so high. It's a high bar to jump. And on that point, I would say, it's a lot of people who've grown up in Vancouver, maybe haven't traveled, they've really kind of grown up in a bubble. And they don't understand why home prices are so high. And frankly, I don't know what you do about that. I know we have stress tests, and the stress tests like the June 1st stress test, which has created a buffer so that if mortgage rates went up into the 5% range, people today would still be able to make those payments. But the problem Vancouver has is it's too good, right? If you look at the rankings for the livability of world cities, Vancouver tends to be in the top 4 or 5 of thousands of cities. I mean, we've got a great climate. It's beautiful. You can climb the mountain in the morning, up in Grouse Mountain. You can be playing golf in the evening. You can do that with skiing and golfing. It's just a great place to be. And we've got schools, great universities, low crime. I don't know what you do about home prices. In a world where, with a couple of mouse clicks, you can transfer $500,000 from one country to the next, where you can get on a plane halfway around the world and be here in 21 hours, apply to go to school here. We live in a globalized world, and the genie's out of the bottle. We're not going to go back to the days of buying a house for $500,000. That's gone. And so I don't know that we would want to go back to those days. You know, there's other factors at play here too, like inflation and low interest rates, but that's another video. So in any event, I wanted to go over those numbers with you. A few other ones I found very interesting. Mortgage delinquencies are down 22%. The delinquency is when someone can't pay their mortgage and they throw the keys on the table and walk away. That's actually down. In my experience, I go through listings on a daily basis. I may look at hundreds of MLS listings every single week. I find maybe one mortgage delinquency. That's where the bank has taken ownership away from the owner and it's a foreclosure and they're selling the property. They are very rare in the lower mainland. And if there were ever a housing crash on the horizon, I think you would see those. You would see a lot more of those. I do not see those when I'm looking through MLS listings. A few other things. Credit debt, Canadian debt levels are actually down by 4%. And that's things like credit card debts and car payments and so on. And finally, of course, I mean mortgage debt is at the highest level it's ever been. But with interest rates so low for now, and looks like it's going to be like this for the time being, and people coming up with these creative solutions like renting out their rooms or Airbnb rooms in their house, it's probably still doable at present. So if you enjoyed the video, the stories, feel free to subscribe. We love having you.